Alright guys, welcome to Go Capital. Today we'll be doing a forex review class on what we've done so far on the advanced class. In the advanced class, we've talked about fundamental analysis, and then we've also touched on technical analysis. So the remaining part of the course is going to be sentimental analysis and the master class. So I'm going to merge the sentimental analysis and the master class together because sentimental analysis majorly is also part of trading psychology. So because of that, I'm going to merge the sentimental analysis as part of the master class. So now we're going to be doing a review on what we have done so far. We've talked about price, the way price move. We've talked about the candlesticks, the charts that we're looking at right now, the chart that we're seeing right now. We've talked about how the red candles mean candles that are going down when market is going down. The red candles symbolize a bearish market, a bearish moment in the market. Taking this chart, for example, this is the crude oil or the US oil chart. This is a 4-hour time frame, and we said that the crude oil chart is going up. When it is going up, it is called an uptrend. Then when it is going down, it is called a downtrend. So, and we said that you can identify what the trend is going to look like from the fundamental analysis. So when you do the fundamental analysis and you have a bias on the direction of the market, then you can also come to the technical charts, to the chart now, and start to do analysis in the direction of what your fundamentals have made you have. So now, just using this scenario we're looking at now as an example, this window, I want to just quickly refresh on what we've done before. This from here, market moved from this particular price level we're seeing here now, coming, from this level to this level. That makes it that's an impulse. You understand? That's an impulse. If you let me delete that one first. Let me delete it and do something else. Let's take, for example, market is moving from here to this place and then came down and then went up and then came down and then went back up, then came down, then went up, came down, went up. This is the structure of an uptrend. What we just did now is the structure of an uptrend. Though the trend was almost going to reverse at this level, but it didn't. Now let me recap. Let me bring your mind back to what I said when we were doing the course in this particular part. This is a low in the market. So the market have moved from a low to a high and created another low here. This low created here is higher than the previous low, so it is called this part is called a higher low. Now this becomes a point of reference in the market that market can later come back to, because I said that there will be 2 points of reference. This particular point, that particular point, because of why? Because of this block that is here, and then the other point of reference is this particular point. So there are 2 points you can be looking at. So I said that this particular point is a point known as the mitigation block, while this one is called the order block. Now I will be going into more explanations as I keep doing live sessions and more videos for analysis, but just understand that this is the name for now. You don't need to ask why is it called that way. This is how I'm using the strategy. So just know that when market moves from a low to a high, it must come down a bit, and then after it comes down a bit, it will go up again. Now if this market goes up again and break this particular high that was here before, Let me change my cursor. I don't know if I can change this cursor to a different one. Yes, I think I can change it. This type, okay. This thing is still shaky. I don't like the way this thing is shaking. All right, I hope you can get the point I'm talking about. This is the point I'm talking about. That point, this point here, that point is a high in the market. So when market goes up and breaks it and goes above it, the way the market moves is that market will come back to it again. It must surely come back to it again. If market must continue in an uptrend, it will come back to it again, to come back to this place or this place. So how do you know which of them it will come back to? Now that is a different class I'm going to do, or you can actually answer that in the review if there's time. So how do you know which of them it will come back to? So the market later came back to that block like we just drew and went up. Now you will say, yeah, it came below it. Yes, because let me zoom it out for you. Let me zoom it out for you so you can see. I told you that when you are drawing this your block, is the price pattern that was formed that you are going to draw. So this is the pattern that was formed here. The pattern that was formed here is like a bearish harami or an evening star. This is an evening star actually. So the whole of this place is what you are going to highlight as the block. So your stop loss is going to go below this block. So in that case, as market was coming down and touched it, you will be in a loss for a moment, but it will not touch your stop loss before the market started going back up. Are you seeing this? So this is a scenario for an uptrend. If you go to a lower time frame like the 1 hour time frame, you are going to see it very clearer. But this is a 4 hour time frame, so it's not that too obvious for you to see clearly. But this is a big trend. This is a big trend because this is a big time frame. Okay, that's a big time frame. So let me clear everything that is on this chart. So now looking at this chart again, I want to draw your attention to something before you start to ask your questions. Market moved from here. Let me draw it this way, and it came here and came down to this part and went up again. Now this high that's created now is higher than this one. So and then market came down again. This particular low that is created here now is higher than this one. So this is a higher low. Now if you are looking at the market this way, whether you're looking at it like this is also the structure of an uptrend. Okay, so now what do you see? The market, after breaking a high, will all come back to the high that it broke before going back up. Now because I'm drawing it this big, it's not that clear to you. So now let's make it smaller. So I'll delete all of this now and go to the 1 hour time frame. So let me cover this area so that you know the area we are looking at. This is the area we are looking at. This is the area we are looking at. So as I go to the lower time frame, you have an idea of the area I'm looking at. All right, so let's go to the 1 hour time frame. 1 hour time frame. Okay. All right, so on the 1 hour time frame, you can see the area we're looking at has become so expanded because we are looking at weeks, like a lot of weeks, like a lot of time. But on the 1 hour time frame, we are looking at intraday. So let's look at this movement. This is the movement we are looking at before, from here to here, and the market came down. Now you will discover that this market came down to a point. Which point did it come to before going up? It came to this point. Are you seeing it? This is the point it is coming to. So then it went up like this. It came down a bit. Now this point it is coming to is this point here. How do I go back on this? I don't know how to go back, so allow me draw it again. Market moved from here to this place, came down, and you can see here Yeah, 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 yeah. Okay. I want to stop there. Now this market moved from here to this high, breaking this high that was here. It broke this one that was here. Now whenever it breaks a high like this upward, that means an uptrend is about to start, but you will not just take it like that yet until you see the market coming back. So the market coming back to this place make us to think that it's going to buy from this point. So from what I taught you, this is what you are going to be using as the block of interest. This becomes your mitigation block. That becomes your mitigation block. That's a bearish harami. So when market comes to it, it will push up, and you can see how far the market went. So let's assume you missed this entry. When market broke this high, it came back again to this part, which is this place, before buying again. Let's assume you missed it again. It came back again to this part before buying again. Let's assume you missed this part. It came back again to this point before buying again. So that's how you follow the strategy. You mark the blocks that are broken, and the market comes back to the block and you buy for an uptrend. That's the case of an uptrend. You see, this is US oil. I'm using to draw it. In our last class, I was using was it Euro JPY, VCHF JPY? I can't remember. So this happened in every chart. Okay, you can see that once market break any particular level, it will come back to it again before buying. So how do you now know the one of a downtrend? This chart is the same. What I'm saying now happens every time, everywhere. So now let's see this one again. Market moved from this particular level to this point and went back up, and then came down to this level and came back up and came down, came here. I'm not seeing this part very well, but I'm not seeing that part. I don't know if I can quickly just, okay. So yeah, so let's take the whole of this as a particular movement. Then let's drop it like this. Now you see that when market moved from here down, it broke a particular point here, broke a point here. Market pushed up but could not get to it, so you missed that one. Then it broke down again, broke a particular point here. So market was going back up to it, and as soon as it gets to that point, it went down again. Are you seeing it? So then it broke this point while going down. Expect market to come back to that point. And did market come back to it? Yes, market came back to it. Are you seeing it? Market came back to it here. After coming back to it, it sold again. This one went up but couldn't get to it, so you will not be in the trade yet. Patience is the game. You be patient, and then the market went back up and voila, touched it and pushed down again. So this is a very simple strategy that works 80% and above of the time. Are you getting me? So at this junction, I would like to take your questions. Let me hear from you guys what you have for me this evening. All right, over to you guys. I think Rashid, you have a question, right? Rashid, I can't hear you. Anyone have a question?
Sorry, I've unmuted myself. Let me come again. Right. So under the fundamental analysis, are you hearing me, boss?
Yes, I can hear you, sir.
Now you talk about the inflation, how it affects the analysis. You said if the inflation rate is low. I don't understand that. Please, can you explain that area? What does it mean?
Okay, normally these are economic data. Like this is things that happens to different economies, any country at all. We can experience what we call inflation in an economy. We can either high inflation or low inflation. So all of this is going to be in the news, and it's going to also be something visible for you to see Like for example, now we in this country, Nigeria, now we're experiencing high inflation because what you could buy with 1 naira before, you can no longer buy with 1 naira. You need more money to buy. Are you getting me? So whenever there is a high inflation in any particular economy, that currency is going to be weak. Are you getting me? That currency is going to be weak. It will not have so much purchasing power. So that's what it means. So if you read in the news, or if not just in the news, but like you began to hear the rumor that the economy, this so and so economy is experiencing inflation, then you as a forex trader, it's an opportunity for you. Are you getting it? So that's how you use those data for analysis. So like for example, now we know that there's high inflation globally. Are you getting me? So all the economies of the world, they are in trouble. For there is crisis coming ahead. So the more you pay attention to the news, the more you know the bias you are supposed to have concerning any particular economy. Okay.
Yes, sir. Yes, I have another question, sir.
All right.
Yeah, I'm still on the fundamental analysis. You talk about the GDP.
Okay.
Please, can you please talk more about it? Because in the videos, you don't talk too much about it. Please, can you please explain more about the GDP?
Okay, normally you really need to understand what I was trying to do. I was trying to give you guys a clue of what I look into, and it's not really whether I am an economist. I'm not an economist. I'm a forex trader. So what I do is, when I just understand what those terms mean, GDP, which is the gross domestic product, is actually one of the measures to know the strength of an economy. If an economy's GDP increases from any particular percentage that it was before to a higher one, it means the economy is doing well. Are you getting me? That's the part that concerns you as a trader. Are you with me? So, and I showed you the website where you can know about this information, like the CNBC or forexfactory.com or Bloomberg. Okay, then you can also go on Google and just type let's say you're looking at the US dollar, you can type US GDP. Are you getting me? So you are going to see a lot of articles written by people comparing their GDP a few weeks ago, a month ago, a year ago with the current one they have currently. So if the GDP that they have currently is higher than previous one, then the economy is doing better than before, meaning that currency will be strong. Okay, so that's how I use those information. I don't use them like an economist. Are you with me? I don't forecast. You get? So I look at what has been posted by the economists, by the gurus, and then I take advantage of that to know a particular side of the market I should be looking into. Okay, so I know that the US economy is doing well than many other economies at the moment. Are you with me? So when I'm going to be looking at the US dollar, I'm going to be looking at it as something that is buying, as something that is strong. Okay, so but another way to still look at it also is, in forex you trade currencies in pairs, in twos. You don't trade one currency in isolation. If you are buying one currency, it means you are selling another currency. So what you do is that you look at the GDP of a particular economy like US dollar, and you look at the one of Japan, like which is the JPY now. So and you compare both and see which one is stronger at the moment. So once you see that, then you know that this particular economy will be better. So I will be buying this currency, I'll be selling this other one. Okay, so that's what you should be concerned about, not necessarily how to determine GDP. No, those are not the things that concern you. You only need to look at the data already published by people. Okay.
Okay, sir. Okay.
All right. Any other question?
Sir. I see that's way, but there are some guys they want to join the group. They want to join the class. They say you should let them in.
I've been letting them in. It's not working. I think it's their network. Yeah, I think it's their network. I've been clicking accept, admit, but they are not. Okay, they've been admitted now. So Any other question?
I still have some questions. Yeah, you talk about some other people that are trading forex that you can follow them. Please, can you give us the name of all those ones that you can follow on social media? You can still know more about them.
Okay, I will share that one in the group later.
Okay. I think I've finished my question. I have no more questions.
Is there any other? Okay, all right. So what I want to ask you guys is, do you guys understand this strategy I'll be talking about now? The way I enter the buy and the sell. Solomon, you are welcome. It's like your network have been disturbing you. So what I've been saying since is just like I was answering the questions that Rashid has. So, and they bother majorly on the fundamental analysis, which is something I think is not that difficult. So, and I've answered him as well. So maybe when you are listening to the recorded session later, you catch up what we have done so far. So, but just before I round up this session, I want to quickly just tell our YouTube audience to please subscribe to this channel if they like what we are doing here, and then also share the video with your loved ones so that people can learn and become better at what they are doing. So I'm drawing some things on the chart as you are seeing me, and you'll be wondering what am I trying to do. I've touched on this before, that in the forex market, the market moves creating highs and lows. It moves in a certain way. So, and the way by which it moves is what you have just seen me drawn here. This is a 4-hour time frame. If you go to the lower time frame, this will be more elaborate. What I mean is it will be more expounded. You know that in a 4-hour time frame, it means it takes 4 hours for one candle to open and close for a new one to form. But on the 1 hour time frame, there will be 4 1-hour candlesticks inside 1 4-hour. So I don't think I need to be doing that now. That is in the basics. So now let's take this point as a reference. I've done this before you came, Solomon. I'm just doing this because of you. Market has moved from this low then to this high. You will notice that this market paused when it got here. I'm looking for, how do I draw this? Okay, yeah, the market, are you seeing that there's a low here? This particular low here is a serious low, is important. This is H4, so every data here is heavy, is important, but because it's H4, you are not seeing it as really wide. If you go to a smaller time frame, this is a whole lot of candles in just this one candle you are seeing here. So the market has created a low point here before, and we know that it created that low with reference to this high when it was going up. So then when market got to this high, it came down. When it was pushing down, it broke a particular low here, so telling us that this is a structure of a downtrend. But you cannot really just establish that with only a break. Why? Fundamentally speaking, the market is an uptrend, so you're not going to be selling in an uptrend. But you know why the market paused when it got here? Because of this low. So when it got here, it started reacting and it pushed down a bit. So immediately it finished reacting, it came to another point here again. When it got there, it pushed up. All of these points you are seeing have important things I'm seeing that you are not seeing yet, because you are still trying to master the procedure. On the 1 hour, there is a lot to look at in this place. You will see one of the patterns I taught you, whether it's an evening star or an inverted hammer or a bearish harami or a bearish engulfing. You will see all of those patterns around this point. So when market goes to this high, it pushed up. Now, any part that the market paused before, when market gets to it again, it must pause at least a little before going where it is going. That's the reason why you saw that when the market was going back up, when it got here, it paused again and was pushing down, but it pushed above it and kept going up. So when it got here, this is an area price action took place before, so market started reacting again, started coming down a bit. Are you getting it? Then pushed up. All of this now you can consider as one straight move, or different highs and lows if you're on the H1. But what happened when market came back here? When market was coming back again, it got to this point, it reacted and went up and broke it down. And when it got here, it reacted again but came down until it got to this one. Now you will notice that at every point the market has created either a low or a high before. When market gets to it, it will relax a bit, it will react a bit. So those are the points you take actions. Okay, so but how do you recognize the important ones that you should be looking at for you to ignore minor ones? So for me that have been in this market, there are things I look at to know the important ones I should be looking at. I call them major swings, the one that causes a major move. Okay, so let me remove all this drawing for you to see what I want to show you now. I want to zoom this. So now this particular move that took place to this level is very serious. It's an important move, very important, big move, big move. This move you see here is big move. You can see there is no bearish candle in between at all. It's just straight. This kind of move is very important, and it broke a high here, it broke a structure here. So this is a very important high for you to look at. So in the whole of that movement upwards, no matter what is happening on the lower time frame, this is the point that becomes of interest to you to look at later on. This is the point you will mark and extend it to the future, expecting that price will come back to it again. And what happened? Market came back to it here. Okay, now this move, is it not important? Yes, it's important, but there's a bearish candle in between, so it's not as important as this one. Okay, so now this particular bearish candle is also a kind of order block. It's also a kind of order block, but don't worry about that yet. But what is important is for you to recognize all of this straight move. I cannot tell you everything I'm doing or that I know, because it took me years to understand this. So it will take you time to know everything I know. So what you'll be doing is be paying attention to the simple ones and bring it to your attention. If you see this market move straight up without any bearish candle in between, this one is important for you to consider the high of it. Okay, are you with me now? So when market broke above it, it came down again to it, and voila, it moved up. So this is how I catch all of those things you have been seeing on the group. This is how I've been setting all those signals you see. Okay, so when I say buy limit or sell stop or sell limit, so I've never posted buy stop or sell stop. It's only buy limit or sell limit or start execution. So if I say buy limit and I'll post stop loss and everything, these are I am finding the place I will buy. Okay, are you with me now? So these are I'm finding it. So my own is to put my cursor or this particular type of ray, and I will just know the price level. So this is the price level 106.29, and then my stop loss will be below this block here, so I can choose 103.71. so then I will now say TP. My TP will now be the next high. That will now be my TP. If you check this very well, this is more than 1:2. It's more than what? It's more than 1:2. Let's look at it. It's more than 1:2. It's more than 1:2. Are you seeing it? This is 3.56, 1:3.56. So if you risk $1 in this place, you will have $3.6 if market goes correctly in your direction. You should not be thinking of trading every swing, okay? You should not be thinking of trading every swing. But if you can find this kind of thing, a market comes back to it, you have found a place to enter your market. You can get all of this once in a week, twice in a week on the higher time frame like this. And you know, sometimes I look at up to 5 different assets, 6 different assets, 7 different assets, just to find a good setup for the week. So if you are doing this, this is a whole lot of money. Okay, this is a whole lot of money. This is about 88 pips that you can see here. Are you with me now? So is it 88 pips or how many pips is here? 100. That's 188 pips. Okay. All right. I don't know how to read this counting the pips, but I think this is a whole lot. Okay. compared with this. Had it been on MT4 now, I will understand it. I'm not used to this trading view. All right, so this is what I want to just explain to you guys today, that once you spot something like this, you already know what to look at this point. Okay, you already know what to look at. That's what you look at. You understand the strategy now? So I will still keep doing more videos explaining the strategy and what it is that is all about. So with this, we've come to the end of our review course, because I think there's no other question, right? We have less than 1 minute to end the class. So any other thing you said, I will drop it on the group, okay? That will not be for online consumption. All right, with this, we've come to the end of the review course. Please, if you have not subscribed to this channel, I'll crave your indulgence, please subscribe. We will be doing more of this review. We'll be talking more about this strategy until you get it very clearly. All right, have a nice day. See you next class.